Good afternoon, everybody. I will be covering for Blake today. So since this is the Daily Roundup webinar, we are going to be covering the markets looking at shorter term time frames, specifically the 4-hour chart. We do actually have movement. It's for those of you that were on the face webinar. I think that so far things have been moving in the direction we had predicted in advance, meaning the dollar is under pressure and stocks are doing quite nicely. I mean, especially if you consider the overnight lows, US stocks are 2.5% higher from where the opened overnight. So that's not bad at all, especially considering that theoretically speaking, there is no real good news to move them and they're extremely overvalued. Now, obviously, as long as that's the case, we're going to be seeing the dollar being in the defensive, which has definitely created some interesting moves. I warned in advance before we saw this move accelerating that some of the dollar pairs look, quite nicely positioned. Specifically, both the Euro USD, you can see it here, tested actually more or less the area that I was looking for as a first area of support. And it's not just what area it tested, but it is also the manner in which it has depreciated since it found a high June 10th. So quite a nice pullback in a very orderly fashion. What I see here is a pennant. I wrote earlier in the chat room for those of you that were there that it looks like that the euro wants to break higher. And I do think that the path of least resistance is higher for at least one more move to the upside. Now, there is a very decent chance that the breakout is not going to happen today because we've already seen a decent move higher today. And, we're getting, closer to the end of the day, hour by hour. So I think that volatility is probably going to contract. But I do think it's extremely likely that we're going to see a breakout tomorrow. Now, the cable has also been producing a nice rebound higher. It is, some way off managing to break out from the equivalent formation. But on the other hand, keep in mind that it did correct much lower than the euro did. That's why during that period, the euro pound was was actually doing well. Actually, it's not a bad idea. We're going to have a look at the euro pound as well. But after I finish with some of the major USD pairs. So pound and the euro found support and seem to be rebounding with quite a nice momentum from key areas. Euro on the precipice of breaking out to the upside. Pound still has some distance to do that, but I doubt it that if the euro keeps going, the pound is not going to be following suit. Now, the one that has already broken out, though, is the Kiwi. So, quite an indicative corrective pattern here. It's also something worth noting here that two things actually it's worth noting here on the 4-hour chart. First of all, that we didn't even manage to produce a lower low. Once we got that move lower, we actually just retested the same area and now we're breaking higher. The second one was that given the fact that we retested the same area, quite an obvious RSI divergence that we have. Now, clearly with risk being bid, and for reasons that we explained on the face webinar, meaning the window dressing that we usually see at the end of a quarter, and in this case, end of the first half of the year, there is a very good chance that stocks will remain decently bid by the end of the month, which is like another, what is it? Another like 6 trading days or whatever, 5-6 trading days. 6, 7 or whatever. So, during that period, it is extremely likely that the Aussie and the Kiwi and, all the commodity currencies that are nicely correlated with them are going to be performing well. And the dollar is going to be in the defensive. So, Kiwi breaking out seems legit to me. Same deal with the Aussie, which hasn't broken out yet, but as you see, exactly as we saw in the Euro, it's exactly on top of the trend line resistance. Now, probably it's going to probably. I mean, there is a decent chance it's not going to break out today, but it might do so later on. Actually, it might be today for those of you that are in the US, but it's not going to be for us in Europe. It's going to be overnight for us. So it might break out, during the Asian session, or might do so tomorrow. Kiwi leading the way for the time being. Aussie and Euro, as I showed, exactly on top of resistance. Cable lagging a little bit, not because it's lagging in the way it has been rebounding today, just because it had depreciated more than the rest. And unsurprisingly, if you look at the DXY, that has also created a corrective pattern here. I mean, this rebound looks very corrective to me. I mean, it's clearly a pennant so far. And we're now testing this horizontal support area at 97. I think below 97, we definitely open the door for a retest of 96, if not lower. So I think the picture is quite clear for the next few days. Now, undoubtedly, there are a lot of factors that can play a role in this market and, make things move abruptly. We know that, there are huge issues in the background which the markets keep ignoring at the moment, but given the fact that they exist, there is an increased danger that something comes out, a pressure, or some deterioration in some of the fronts that are currently ongoing, and we can definitely see a reversal of these trends. But absent of that, I would expect that this trend that we see to start the week has a very decent chance of continuing for at least several days to come. So if you're looking for some shorter term trades, looks like it's probably a decent period to go after them. Now, Nissim is asking gold, silver, Aussie, USD, where to put the stop. Now, where to put the stop in Aussie, if you want to trade this breakout, you would obviously, let me mark. So, trading a breakout from this triangle, buying the breakout would immediately put, any risk, there at the previous low of the triangle. So like 68 cents. So leaving a little bit of a leeway, depends on, how you want to trade it. And, the next area of resistance I would be looking for would be, let me also go on the daily chart and have a look at it. So next area of resistance I would be looking for here would be 71.30 is the 61.8. 71.30 to 71.50, quite a decent area. The risk reward is definitely there, because let's go back to the 4-hour chart, because that would mean that you have a 2.4% upside with less of a downside. So at least a 1-to-1 risk reward ratio to begin with. Now, having to do with your questions about gold and silver, gold and silver, both of them are actually breaking out. I mean, gold has already broken out from this consolidation formation. I would be looking for a move towards 1791, which is the 127% extension. I think that against 1735, it's it's quite a decent target as long as we stay above that breakout area. The path of least resistance definitely remains higher. Now, having to do with silver, Silver hasn't yet broken out from the equivalent formation. You can see it here, finding resistance so far in this channel once again. But I suspect that the chances are that we are eventually going to see this breakout, in which case I will be looking for $19 to be the next upside target. Now, let's also have a look at USD CAD. So I was initially last week expecting one more leg higher from USD CAD, like this. So one leg higher, consolidation, another leg higher, and it might still be the case. I mean, there is a chance that we're going to see the Canadian dollar underperform the Aussie, the Kiwi, and the rest. Okay, but clearly, if the trend remains for the next few days that risk on correlated FX currencies are going to be decently bid, probably that's not going to be easy to happen. In which case, we might see another attack towards this descending channel. You can see it. And, that's one of the problem of corrections. They can be rather complex. I mean, you begin a correction, you begin a corrective move, and, initially you get like one move, second corrective move, and then another leg lower, and you suspect that this might be it. And then you get this, and you say, okay, it's a little bit more complex. You suspect this is a triangle. Then you break through it. Then it's a channel. So, that's why I keep repeating that, it's extremely hard predicting how a correction is going to unfold. And, still this seems to be the case, meaning, we might see more downside before we actually see the USD CAD recover, because I'm still rather confident that USD CAD is not done moving to the upside. There is a very decent chance that there is more left. But, timing when that begins is not going to be that easy. Of course, if you want to be on the safe side, you can just, be patient and expect a breakout from this longer term channel. But if you want to jump a little bit the gun because you're looking, to be better positioned, to enter the market sooner, so you're actually risking less, you're reducing the chances of this trade working out. So, it's a trade-off. I mean, you have to make a choice there. In any case, what's this shorter term triangle that is developing in here? If we break below it, another retest of the previous low, or even a little bit lower towards this channel's trendline support, as I said, is definitely a possibility before we move higher. Here is also the S&P, and I think if there are no more questions. Oh, we do have another question from Dimitri, so I'm going to cover that for sure. And if anybody else has any question, go ahead. I mean, I'm going to finish the webinar once I'm done speaking about this, and I've covered the question, so don't worry about it. So I'm still seeing the consolidation here in the S&P, and admittedly, there is not a breakout from this consolidation. But as I said before, my intuition tells me that the chances are that we're going to see another move to the upside. Okay, that's why, since this is a daily roundup, all of you here are members of ForexAnalytix. You saw that I made a pattern in play last week that did very well, being short the S&P, and then I made another one once we rebounded, which I closed with very minuscule like loss when I saw that the initial reaction lower was not what I expected. So then I started suspecting that we're seeing another consolidation. And when you're in an uptrend, any type of consolidation has higher chances of breaking the direction of the previous trend, which is higher. Of course, the exact same thing applies if you're in a downtrend. I mean, a consolidation has higher chances of breaking the direction of the previous trend, which is lower, of course, if we're talking about the downtrend. So, that makes me extremely skeptical with potential downside in the S&P being imminent, and tying it up with timing, as we explained before. I think, the path of least resistance and, the more pain in the market will be for S&P to push a little bit higher, for all equivalent FX currencies that are risk correlated to push higher before we see the market coming back to its senses after they've done window dressing, the end of quarter and the end of some half year. We might then see some risk off, which you can expect that to unfold at a much faster pace than the move higher, because that's how this market works. Hi Steve, would you mind explaining how you identify a false breakout? Yes, I'm gonna tell you Oliver what I think you should watch out with that. Steve, have you decided to cover your S&P short yet? No, absolutely not. If you remember, Jason, what I did though when we had that initial move lower here is that I took advantage of that to get rid of my excess position in the indices, because I was certain that I'm going to have the opportunity to to exit this market with some profits, and I still believe that I'm going to make profit from this trade. But adding to my position, I had ended up building a full position in the S&P and 3/4 of a position in the Nasdaq. So I took advantage of this plunge lower because this market is extremely tricky. And what I did, I also said that on the webinar and the chat room many days ago, is that I got rid of my excess position. So now I have a very decent cost average in my shorts, because I still have both short positions in Nasdaq and the S&P, but I now have half a position in the S&P and half a position in the Nasdaq. So so bottom line, I'm not pressured at all at the moment, and I'm absolutely fine. And I'm not looking to get rid of my position, despite believing that the next move is going to be to the upside, because you know me so far. I mean, I take positions with a specific time horizon in mind, and the general thesis of my trade hasn't changed at all. I do believe that it's not going to play out immediately, but the initial parameters that I've said haven't really changed. What is half or 1/3 of a position? That depends. Didier is asking. That depends. Each one of us has a different size of a full position, right? So that depends on what is your time frame, what is your trading account size, what is the leverage you feel comfortable of using. So in general, I think that it is a very, very good, in my opinion, it's actually necessary for you to set a size that you consider a full position for your trading account, your trading style, you know what I mean? And then based on that, what you consider a full position for those parameters, then you can start building, a trade based on that parameter. So if you want to like scale in, obviously you're not going to go immediately in a full position. You're going to, you're going to put a 1/3 on, then another third on, for example, then another third on, or you might do it in quarters, or you might be more confident and do it in halves, so you only have 2 entry points. So no need for me to go in details. I can roughly tell you that my trading account is a 6-figure trading account, and I don't like to use big leverage. I can give you those parameters. Now, Steve, we had a question about the CAD yen from Dimitri. So let me see what you. Hi, Steve. CAD yen bullish engulfing. Yeah, most probably. I haven't checked today CAD yen, but the vast majority of the commodity currencies are actually producing candlesticks like that. So I wouldn't be surprised if the CAD yen was doing the same. Here it is on the 4-hour chart, and I'm going to go to the daily to confirm what you're saying. So here's the daily. Here is CAD yen. Yeah, absolutely. This is a bullish engulfing. Yes. So yes, this is a bullish engulfing on the daily chart. Having said that, because obviously since you're asking, Dimitri, you're looking at it, I have to tell you that I would choose, I mean, if you want to be long one, commodity currency, I would probably choose Kiwi or Aussie over the Canadian dollar. They seem to be better positioned, in my opinion, at the moment. I'm not saying there's something wrong with that, and you might be seeing it from a different point of view or lens than I am at the moment. I'm just sharing my personal opinion. I mean, that doesn't mean anything, right? Okay, so not an amount, but pending on your budget, thanks, and your max leverage, thanks, Steve. Depends, Didier. Now, this is another conversation. What my max leverage would be. It depends, and I'll explain what it depends on. I have no problem leveraging my account 4, 5, 6 times if and only if the trades are not all very tightly correlated with each other. For example, I would never use like a 5 times leverage for the following: to be short the S&P, long Euro Aussie, long USD MXN, short the Aussie USD. Do you see the common denominator? All the trades I just mentioned would perform well under risk of environment. So, for example, I wouldn't use 5 times leverage to have trades on that all of them would, in sync, either perform well or bad. But I would have no problem having in total a 5 times leverage in my account if the trades would be, let's say, short the S&P, long the Euro Pound, short the Aussie Kiwi, and short the USD NOK. Because if you put those down in a correlation sheet, you would see that there is very, very little chance that all of them are going to be doing badly, or of course the opposite as well. They're going to be doing well concurrently, right? So it's not just how much leverage you're willing to use, but it is also what does your portfolio include when you're using that leverage. So you have to keep that in mind. Okay, so if I want to trade 2 or 3 things that are well correlated with each other, I'm not going to use more than 2 times leverage, most probably. But if some of the items are uncorrelated with each other, then yeah, I can go higher. You know what I mean? Okay. Any more questions or issues or anything you want me to address? If not, I'm gonna. Steve, are you self-taught or did you used to work for a firm? Both and neither. I'll explain. I started teaching myself mostly with some guidelines from my uncle, which was a very successful FX trader working for very big banks. But I started my trading career actually trading football bets when I was in university, but purely from a mathematical approach. And then I did work for some years in a fund before we made ForexAnalytix, and then running all the projects in ForexAnalytix left me no time. So now I just have a relationship with them. I give them some trades that I feel confident about, and I get paid based on performance. So I maintain that kind of a relationship with them. Okay, so have a wonderful afternoon, evening, everybody. And I'll see you either later in the chat room or tomorrow. Bye-bye.